Right, what I want to talk about is the upcoming week. Obviously, we've got to talk about what's happened last week, but we also need to go into detail about what we've got ahead here. So I'm going to start with that. So, hi Ken. So we've got US jobs on Friday, and you can see from the supply shock we had in the early part of last year, we saw a nice spring up in US jobs, but the growth since the summer has been pretty pathetic, and we're actually looking for a negative number this week. So hardly surprising we are seeing the dollar pick up, gold staying high. Gold's completely been, we'll obviously go into detail about gold, but it's been flatlining through the whole month of January. So if we don't get any satisfactory pickup in the jobs market here, then what we've seen the back end of the second half of last week is going to potentially accelerate, and we will see havens like the dollar pick up. So let's now move on and look at the markets. Let's pick these markets apart. Of course, the other thing that's going on is we are still well and truly in US report season. Notable, let me just grab my list here a second, because I've got a summary of this. I can summarize it without picking through this. No, I can't lay my hands on it quickly. Here we are. Right, so jobs, earnings data we've got coming up. This is the US. We've got, of significance is a few farms. We've got Pfizer and Amazon Tuesday. Oh, and Google. So Tuesday is the big day. Then we've got PayPal, Qualcomm, and eBay Wednesday. Yeah, that Tuesday is the most significant earnings day. BP, Pfizer, Google, Amazon, Amgen, and a number. Good morning, Ken. So a lot to come. So let's just get rid of that. So going to kick off from the dollar. So obviously we've finished the trading month for January, and the last time we had, this is the monthly chart on the left, last time we had a bar like that was back here in end of 17, early 18, and this dollar picked up into 1920. So I'm not suggesting for 1 minute that we're going to get a big shooting up of the dollar. What I'm going to suggest is that we are at least going to pick up and reconnect with some of these averages. The daily has had a couple of lifts to the upside and is sitting above these averages. So if we see a significant deterioration in jobs on Friday, which is what expected, I think we can come and see this 91.85, 92 all the time. We're above these averages and we're not sitting down. This could just continue higher. Okay, so that if we close, you can see the trend line here and the support here on the monthly chart. So you would have thought we'd at least inch back and reconnect with that 92 moving average up there. Okay, so let's look at the other thing that concerns me is, let me I've momentarily forgotten the ticker. Let's look at the 10-year notes. Yeah, this is 20 year. Where's the 10 year? All right, let's look at 20 year notes then. If these US 20-year notes pick up and you get, that shows there's money coming out of the system basically. God, mine's gone blank. I can't think of the ticker for the one I want to look for. Anyway, okay, so let's just start looking at what we've actually got in the indices. So let's look at the NASDAQ. Let's start to pick up speed, and so I don't drag this on too much, because there's a lot to get through. So monthly chart, we have a pin bar on the NASDAQ on the monthly, and we have lower volume. It's not untypical of this time of year for markets to have a wobble back end of January into February. Not unusual at all. But what concerns me is the fact that yeah, that is actually a very nice pin bar. So all we've done on the daily is pushed up on lower volume, and now we're getting pullbacks into key moving averages. So we finished the month sitting on a 50-day average, the mother of all moving averages. But you can see the monthly is just way out of kilt with any moving average. It's floating. And we have got a divergence up there in the MACD histogram. So the momentum, and the histogram on the daily is already coming off. So I think we could see some, I think we'll come off this for a little bit, for a short period, but you know, the scene is set for some deeper retracements. Certainly on that one. Let's look at now the Russell so far has done incredibly well. But you can see the way in which the Russell has been coming off significantly on higher volumes. It's been coming down on higher volume. Had this volume have been scaling off, I would have suggested this could be a pullback, but the fact that this daily chart is still coming down on higher volume and has not reconnected with some averages, then and that's something of a pin bar at the monthly as well. It's any pullbacks are to be shorted until we reconnect with that one. Let's look at the Dow. Now what's interesting about the Dow is you can see the trend line on the monthly, clear trend that we've just tucked ourselves underneath, and that comes from the high of January 18, February 2020, before we saw these two giant months of selling, and and of course that trails the trend line up, and we've just tucked ourselves underneath it. One thing to note for the bulls is we didn't engulf the December. However, that is clearly looking lower. We're not, oddly enough, we're not divergent in the MACD on the monthly, but we have come down with volume on the daily. Now, one of the most interesting things on this daily is that all we've actually done is ended up inside, not outside, but inside the whole January range. We spent a decent proportion of the month above this bar here. This pink zone and this bar is the first trading day in January. So even though we saw that selling the second half of the week, particularly on the Wednesday, all we've done in the close of the week is to sit neatly on the January lows. That's all we've done. So if we do get any, you can see the moving averages are about to close up here, about to cross. That happens to be an 8 and 50, doesn't really matter what it is. So I think any early uptick, any pushes higher into something like 300 and 500, it's possible we'll see a high move, is potentially shortable. If we go right into the shoulder of that January 4th bar, 800, that would be very, very, very nice to potentially short. Any push back into this overhang trend line could be a good place to get short. So it's not a significant, at this stage, it's not a significant sell-off. It's just we've just retraced our steps to the early part of January. And one of the things that I had a problem with the last couple of weeks is literally finding good stocks to buy and hold. There's some good intra-week trades, certainly some good day trades in stocks. Huge number of stocks pushing up on shorter time frames, but no real good value and growth stocks pulling right back and coming in. So I'm looking for some short-term, some early push back in the first half of the week with potential opportunity to get short in the second half of the week. If we look at the weekly chart on this Dow, you can see the Dow is already nestling into the trend line here. So it's a significant drop. We're completely engulfed last week's trading, but we are sitting on a trend line that's coming across from, this is a very long-term trend line. This has come from December 18, underpinning all we've done since we pushed up in November. And so the most significant price there is the 2020 highs at 660. So the 600, 800 area is an area of key structure in this Dow. Right, moving swiftly across to Europe. Let's look at Germany first. Let's look at the DAX. This is much weaker, much weaker, and so we're literally just hanging off here. So any potential pullbacks into the 500-600 area looks as if we're going to come and see 13,000 on that one. And the FTSE has been the weaker indice all along anyway. UK had the additional burden of the transition in Brexit and the cost of Brexit. And we're also, something just to remind everybody, just in the run-up to the December 19 election, we were virtually on a recession, a technical recession at that point, which somehow the opposition didn't make a meal of. Alright, so the FTSE is into this pink zone support. RSI is now on the lower end. It's not extreme, but it's lower end. So it's decent support. So if at some stage during this week we find ourselves closing above 6,500, that could claw its way back. But in the meantime, I'm looking at the stocks. On the stock scan I've done today. I mean, my overriding thought from the stock scan today was the fact that we are just in the process of pulling back on some of these extreme moves that we saw in November on some good quality stocks. Like I said a few minutes ago, it's actually been quite hard to scan for stocks at times in particularly the last couple of weeks. Because stocks just were not pulling back to levels that would interest me. whereas now we are getting close on some stocks to levels that I want to buy at. And also what came out of my scan was I actually had a longer buy list than I did a sell list. So let's charge on and do that. Now commodities are standing still at the moment. So I'll just go through forex in a minute. So this gold flatlined for January. We did see 1805. Was it this time last week? I think it was. Yeah. No, it was a couple of weeks back. Yeah, we saw 1805 on the Asian Open on the 17th, and we've not. Europe and the US didn't get a chance to buy down there. So I would have thought, given the congestion we've got up there in the gold, that we could now potentially come back to that 1805 and lower. But it's hard to predict because it's holding up well at the moment and the trend lines are holding. But ordinarily, assets like gold, if the markets are very weak and there is a real a degree of panic and fear setting in, then assets like gold could well be sold to cover margins, if nothing else. The level of margin that has been used in this market up till recently has been exponential. So any margin calls could encourage some traders to dump positions in commodities like gold. Now, silver is allegedly been targeted by the Reddit crew. So silver's had a tremendous couple of days off of this 24.85, and so any pullbacks to 25.26 potentially to be bought. But dollar strength could quash that. So so this is real relative strength to come up like this at the point where gold has been picking up is a double whammy. It means that the commitment of traders behind silver is good. So it's hard. We're already in a lot of congestion above here. This 26.27 is a tough area to get through. So you would have thought we could dip back into the midweek level of 25, but that's a powerful move. So if you're not in silver and you want to get in silver, you may have to buy higher. Right, oil is flatlined like gold, only to a greater extent than gold. It's incredibly flat, and you can see on this weekly chart, I've got this pink zone here, and we're just going absolutely nowhere, and we're under this 8-day average. So I think we can get down to 50 and less. Interesting that the gold sat up and not sold off with the Dow and the Nasdaq. So relative strength there again. If there is real fear in this market, I would have thought oil would have found itself much lower. So maybe that's to come. Maybe this. I mean, there's certainly hard to see buyers stepping in on this oil as we just range like that. Any move higher into this resistance area could be the trigger for a leg down. So I mean, oil is very sensitive to jobs. So the fact we've got jobs on Friday and oil is sitting up, maybe the market thinks that job numbers is going to be good. Who knows? Right, so let's have a quick look at a couple of the other commodities. Wheat these soft commodities, as we call them, are really strong. Beans are the same. They're just not pulling. Normally, Wow, that's an incredible weekly chart on the beans. Normally I would expect these to do a deeper pullback, so wow, I mean, if those beans keep going, then we're going to be looking at 15 plus and heading away up to 20. I would really like to see some strength in the dollar to drag this back, if nothing else. And then we'll look at cocoa. So we'll also look at lumber. Now, the UK housing stocks have had a real tumble. Lumber's sitting right up. So that suggests, and house sales in the US are still sitting up. So what that could be telling us that yeah, maybe the markets aren't as weak as I think they are. This is good. Cocoa is really settling down into this 1675, beginning to turn up. It's got some more legwork to do. It's got some more lifting to do. But if at some stage soon we can close above that 1737, I'm looking for this to get back to the highs, 20 plus. So I am happy to sit in cocoa at this stage. Got no concerns about it and would potentially start to add if we can close higher. Right, enough of that. Anything else I want to look at on the softs? No. Right, I haven't looked at forex yet, so let's just do forex now. Right, well, I'll include Bitcoin. Bitcoin is not happy up here. Closed under this structural support. Bitcoin does tend to fall off if the appetite for risk is falling off, which of course it is at the moment, short term. I still think it's going to come all the way down to this support. I don't think that's going to sit up there any time longer. I think that needs a healthy, good yank down before that's going to potentially going to get ready to go. And if we close under 28.5, then we've got this massive gap at 23.5. 20. You could argue that 24.4 would close it. I think that's lower. I don't think volumes are coming off. I don't think that's sustainable at that price. I certainly personally wouldn't buy that up there anyway. Natural gas typically falls off this time of year. Big sell on Friday. Looks lower. Right, moving. Let's go talk about forex. Let's get right into forex. Let's start with the pound. So we're completely flat for the week. Completely flat, just going nowhere. So if this is a bullish consolidation, it needs a dip. Huge amount of resistance. The trend line is, and the moving averages are right down there at 35. So I think any push higher at the moment is going to be sold into, and I think the market's going to wait till that comes down to 135, maybe lower. If we start to close under 135, then we could come all the way down to 132. Pound yen has had a great week. So this is where the markets are mixed. Ordinarily, if there is fear in the market, the yen would get repatriated, and you'd see the yen pairs come off. But that is looking like as if that's a bit of a frothy blast off. In other words, maybe there's a lot of people sitting long on this. They've dragged it up. and were not able to sustain it up there. So it is looking vulnerable up there. And you would have thought with the way in which the indices behaved back in the last week, you would have thought that at the very least that needs to see 142. Really hard to see. It's a decent close above this level, and I guess it reminds me of what we saw in this pound yen a while back. Yes, we got a little bit detached from the averages up here last year and dragged right the way back. Getting a little bit detached from the averages here. So you would have thought at least they're going to want to come into line on that one. And ultimately, when that did come down, so this is a bullish consolidation. Ultimately, when it did come down to support, it pinged up. Now that's what I think we could see in these markets. I think, including the indices, I think if the indices could dip back, so we see some more selling into the first part of February, I think they then could ping up into second half of February into March. So my overriding, particularly, say, coming back to what I saw on the stock scans, my overriding thought was, well, these are, the stocks have just got too hot. If they can pull back to levels that I'm interested in, I'm going to be buying. So I think my view is at this stage that the markets are just doing a healthy end of January pullback. Of course, if we get to a situation like last February, then we need to just be cautious. I need to be cautious when I start to buy in the coming days and weeks, and make sure that the markets and the shares are sustaining and holding levels that I'm interested in. Okay, so at this stage in the cycle of the markets, looking for pullbacks, looking for this to settle back down. Right, let's quickly go over the yen, and then I'll move on because there's still a lot to get through. Right, Euro US. We got too hot up here. We had a really nice 1, 2, 3, 4, 5, 1, 2, 3. Got too hot, broke down, and now we started a little wave pattern to the upside. There's a lot of support here. However, we're under the averages. We can't climb. We've not been able to climb back above the 122. So I think we're due a deeper move back into 120, supporting what I've said about the overall dollar index. Bear in mind this is the biggest component of the dollar index. Euro yen had a good week as well. Nowhere near as good as. No, I was going to say nowhere near as good as pound yen, but I take that back. We're very close to major resistance though. This has been a tough one to trade. I traded this a few times in the second half of last year, and it's become a very lethargic mover. It takes a long time to get 200-300 pips out of this, but it's a potential cup and saucer, isn't it? There's the nice cup pattern. We've dipped back. This could, if that accelerates here, that bodes really well for the overall markets. So bear in mind that's a really good finish last week. Pullbacks to 126 are potentially viable to see if we can break up, which contradicts what I've been saying in the market, I have to say. But yeah, it's looking good. Right, now let's just look through a few others. Pound Aussie. This is having a really good move up. A lot of congestion above. if we do knock into 180, I would have thought that would then get the pullback at least. A massive trend line, a massive average up there at 180. So I would have thought any push into 180 could at least see profit taking as a minimum. Now the other one I was interested in, a couple of others, and then we'll move on. Aussie New Zealand, that did a little run. Yeah, okay. I thought this 106 would hold, so we've come right back into support there. Now that would figure because gold's going nowhere and the softs are screaming higher. So that would marry up with the sort of export markets of the Aussie and versus New Zealand. So at this stage we look as if we can come all the way back to 105. If we come back to 105 and hold, then that one would be a potential good one to move into. Euro CAD's the other one I was going to look at. We're still in this box really. We've seen the lower end of the box. We dropped out of it and pulled up. We didn't engulf the next day, but that certainly looked into that. I would have thought we could knock into 156 and then pull right back to that support. I think this is, box plays are really tough. There's a major trend line there. I think this could, if we start closing under here, it's a structural point. Start closing above 155, I think we go to that high. Start closing underneath this 154, and I think this could fall out this box and come back to June levels. So I have, it's a very bearish close into last week. Tough one. You know what? I personally wouldn't trade it. I'm not clear on that, as you can tell. So I'm going to not commit myself to that. So the euro and the pound overall are showing great strength, but the pound's beginning to feel the strength of the dollar. And the best pairs out there at the moment are the yen pairs, even the US dollar yen. So euro yen was a really nice chart. Pound yen looked a bit shaky up there. The US dollar yen, yeah, I'll talk about that in a second. US dollar yen's really punched out of this channel. So this 102.50.60 has done well. So we look as if we can at least see 105.30. Any pullbacks to 104 are to be bought. It's a nice channel. It's a nice funnel channel breakout. So yen is still showing weakness, and they appear to be the ones to be in. Right. Let's move on now. Ken, anything else you want me to look at? Anything else you're interested in before I leave this? Pound New Zealand. Flatlining. All good. Okay. Pound CAD's had a punch higher, hasn't it? So that support 167 got bought. That looks lower. That's stuck in a box as well. US dollar CAD. Last one to look at. Well, given what I said, tell you what, given what I said about oil and the dollar, this looks as if this could pop up. Market's going to want to see any significant buying, it's going to have to see a good jobs number. I think it looks short term looks lower, but if we pop down to 125 on that one and hold, that could pop up, or any close higher in the early part of the week above 128, that could pop up. Right, let's move on. Let's talk about stocks. Right, let's go to now my prepared. I stay off my prepared list short term. Let's just look at the extraordinary moves we saw in game. Wow, even I thought this would sell off. I thought they would let go of it. It's just a bricks and mortar, old-fashioned video and game shop, really. That's all it is. Down in Texas. I don't know how many branches they got. I don't think it's enormous. We've come up on low vol. I think I thought that in the second half of last week they would let it go. We're sitting up. Obviously come up with decent volume, but I thought they would let that go. I expected that to come at least back down to 100 by now. I certainly wouldn't trade it. I think it's dangerous to trade. I've been reading about some people losing money on it. I think somebody tried to buy a lot of shares and sit in them. Well, I think the volatility is horrendous on this. If you look at the smaller time frames, let's look at an hour. There's an hour chart on that. So at some stage on, what day was that? Yeah, so on Thursday, when the hype was really at its peak, what we saw on this in day trading terms, a great thing to day trade if any of you guys are day traders. So on Thursday we saw 480 area, and within 2 hours later we were down close to 150. So from 480 to 150 is ridiculous, absolutely ridiculous. You know, it's a new social media market phenomenon to do that in 2 hours. There certainly were big players, but all the hedge funds were short. There were some big hedge funds that were short. It's a lot. It's definitely manipulation. It's 100% manipulation. Whether or not it's big players or Reddit retail traders, or probably a combination of both. I mean, certainly here we saw as we were basing here, we saw an increase. Anything you see with an increase in volume has got the potential to break, particularly in this sort of 1, 2, 3 pattern. So before this all happened here, we'd already had a 1, 2, 3 wave pattern with an increase in volume. So on any stock you're trading, that's a big plus. That's good one for your chart library if you see that happening. But it just got completely out of whack. And all the time it was doing this, the volume had gone out of it. Now normally there's something called a pump and dump in the US, phenomenon called pump and dump. It basically, it says what it does on the tin. Day traders find a stock that's got good volume pre-open. I use a service that tells me what stocks are pumped up pre-volume. Nasdaq, you can trade Nasdaq stocks before the cash market open. So good old-fashioned strategy on stocks was to scan the Nasdaq, pick the stocks, pick the 10 best stocks with pre-open volume, and get 10 charts open and see which one's really buzzing at the open. That's all the day traders have done here. You know, there was the buzz in social media anyway, and it's just gone to the just gone to the moon. But yeah, to trade that, you've got to be an expert stock day trader to get anywhere near profits on that. Otherwise, I've been reading about people are getting burnt, and must be certain retail traders who lost a fortune on it. But it's just really, even on Friday, if we just take a look on Friday, we went back to 400, 420, and then we were 250 at the lows. We were 250. So the range is getting tighter. You know, we're coming into this. We've got this much tighter range on lower volume. So I've got no idea what that's just crazy.
So Mike, the question is, how many other stocks do you trade like this? Because PM stock was one, then AMC also was another one.
I tell you what, I mean, if there's stocks like not to the extremes of this, but there's stocks like this every day of the week. And I'll tell you what, if you want to get, if you've got any interest in getting stocks like this, it happens in the US, doesn't happen in the UK. Right, let me find this website here, benzinga.com. This is, now these, like I said, you hone in on NASDAQ, come into the pre-market. If you go down to this tab here, it'll give you this pre-market list. There's the list for Friday, and this stuff did 26, 43, 64, 97, 245%. So if you like the idea of day trading stocks, look at this one. This is MFH. Let me call this up on the charts. You really, I would not recommend you do it. MFH, Mercury FinTech. Is that the right one? Let me just double check. Mercury FinTech, yeah. Right. 5-minute chart. Do a 2-minute chart. Like I said, this happens every day of the week. So this stock has gone from 329 to 450 in 10-15 minutes, and it's a penny stock. It's been moving around at 2.5, 3 cents, and then it's had several days where it's gone a little bit crazy. It went on the 7th of Jan, it went from $3.35 to $4.80. Like I said, that you can, if this is not a new phenomenon at all. Obviously, this isn't on the scale of GME. This has not gone from $20 to $500, but if you apply some leverage on this, which is easy to do on a penny stock, then you can do this any time of the week. And if you look at, I don't suggest you do it, because to do this properly, you've got to have level 2, level 3 trading, and you've got to know how to read the VPNs. You've got to know how to read the market makers, which none of you will know how to do, because they're in a let's have a look at cost. That was a much talked about one. Costs. They make headphones. Let's look at costs on the charts. I need to get off this subject because I need a lot to do. Yeah, similar thing with costs. This was 4.4, and that's gone up to 125. Just makes headphones. That's all I do. This is a joke. This makes a mockery of the market. But you, like I said, you can trade it. There's a 15-minute chart. You could trade it. You don't have to apply. You don't have to use massive amount of leverage. There's the support, 53. So on this day, on Friday at the open, it went from about 45 to 50 to 105. So it went back to this main bar here. From 44. That's the way to do it. I mean, forget GameStop. I wouldn't even dream of trading GameStop unless I was really focused on it and well prepared. But I would trade stocks like this that are a lot cheaper and in my view safer, not so badly hyped. But that's a complete, doing that is a very specialist method of trading, and you'll get slaughtered. You'll get you'll get absolutely slaughtered if you don't know what you're doing. Right. Any more questions on that? A lot of the brokers put the kibosh on it anyway. Not just IG. A lot of different brokers put the stops on that. Right. Let's go to our normal list and quickly get through my updated list. So I'll just quickly. Oh, I know what's happened. My list is not going to show up unless I close this and reopen it. Okay, I have to do it the manual way. Right. I've prepared my list, and without quitting the software won't load it unless I quit and come back. So I'll do it manually. Right, let's quickly go through. That's a bit silly, isn't it? Let's go through the stuff we've been talking about all this time. BT lower. Looking forward to that coming back to 120 at least. It's coming down on volume, and the strong pound is not helping. So I'm looking forward to that coming back. So it's been as high as 148. If you are real divergence up there. If you're day trading it, not day trading it. If you're looking to trade the waves like me, Q3 on Wednesday, right? If you're looking to trade the waves, then we saw 140 up here. We got close to 148, 147, 148 up here. If you're a short-term trader like me and you like the waves, then you should have been getting out. If you're a long-term trader, do nothing. If you're looking to get in it, sit tight. As Andy says, we've got third quarter results on Wednesday, with markets looking lower short-term. Best way to trade it if you're not in this is to be around when the earnings comes out on Wednesday and see if we can hit these spots and hold them in smaller time frames. Get in them, and then if they hold into the close, then sit tight. If you don't have that time, you don't have the ability to do that, do nothing and just wait and see what wait and see where we are at the end of play on Wednesday. See what the market has done with it during that day. But protect your capital at all times. Right, I'm going to really crank through this now. Let's go through let's go through the banks. Right, the banks all look lower. Here is Barclays, lower. Looking for that to come into 125, 126. I think the banks have held up remarkably well, considering what somewhat heavy selling we saw last week. Let's look at NatWest. Again, held up. 140 is made. If we come and see, if we come under 140, I think that could see some decent buying. Typical distribution pattern. So we've seen a lot of profit taking on this pattern here. We're now looking for that to climb back to at least there. I think it could. I actually think if these markets are as bearish as I think they might be, I think we're going to come back to these November levels. I think we're going to boomerang all the way back to these November levels. And this just doesn't go for NatWest. I think that could potentially be for the indices as a whole. Okay, so that's we've looked at, let's look at Standard Chartered and Lloyd's, and then we'll move on. Lloyd's looks as if we could come and see 30. If we come and see November lows, we're going to see 25, 27. Again, it's, you know, after this drop, it has held. So if I'm wrong, we're going to start closing above 35 and then winding our way back up to those highs if I'm wrong. So if I'm overly bearish and this end of month January sell-off is going to be met with hungry traders buying these dips, then you should see that in the first part of the week. Come to your, keep punching in, and I'll come to your notes in a minute. Let's Stan. Very same pattern. Could potentially come down close to the £4 mark. In the meantime, it's holding after that high of 520, but looking lower. Right, let's look at oil. BP, yeah. Okay, so it's a big week for for UK earnings as well. Well, oil has held up very well. A lovely lot of support down there, and we're holding the averages. So in theory, if this is really bullish, we might dip a little bit lower, but ultimately start to wind our way back up to those highs. And I mean, year end, I would have thought in the second half of this year we should be heading for 350 plus on this one. Obviously, we just got to wait and see where we are once we get past earnings on this. But at the moment, it's a good looking chart. It's come down on lower volume, so there's not a lot of people bailing out. Therefore, in theory, that may not go that much lower. Let's look at Tullow. Tullow had earnings on Thursday, did it not? So we dipped into 22, held on to 26. So as long as we can start closing above 28, that looks as if we can continue to climb back to 40 plus. So if you're interested in this Tullow, I would just wait and see for about another day or so to see if we can hold this level here. If you're lucky, we may dip back down to 22, 23, 24 for an opportunity to get lower. But we've got to, by the middle of the week, we've got to be holding minimum 25 on that. So if you find yourself going to Wednesday and Thursday and we're under 25, be careful. Shell B looks lower. 12.45. Hard to see that turning around here. I would have thought that's coming down to 12. Again, if you're a short-term trader, you should have been getting out of these highs. Very divergent. And huge amount of resistance. Now we're essentially coming into the support. Back down there around the 12.30, 12.40 mark. Clear pattern. Clear distribution pattern. Profit taking, in other words. Because of all this congestion up here, we did not close up there. Had we closed up there, we could have potentially gone higher. But we've got 1, 2, 3 touches of the trend line with lower MACD and lower RSI. So clear distribution. Right, moving on. Miners. This is where my new list will come in really handy. Let's go to my miners list. Here we go. POG. So we've seen 41 plus on POG. We've actually gapped down here. So the main support to 26. You may find that coming down to 26. I think it's a good chart. I just think it may come down lower before that goes higher. Well, we're already touching the trend line. It's a great little chart. I tell you what, that starts closing higher Monday, Tuesday. You can find yourself up at 33 plus pretty quick. That's a very nice chart. Pan-African has had a good run, and that's pulling back into support as well. May see 22, most recently seen 26 plus, 27. Good ball flag, but just may need to come lower first. I've got an alarm set for 20 and a half. I've got another miner, Kinross. This is a US stock. I think that's basing. I did get my stop too close on this. I made a mistake getting my stop too close on this, I have to admit. But I'm going to leave it, potentially get back in there and give it a much bigger stop next time. This is a silver miner, I think. Heckler. Again, US. That looks as if If that pulls back to 5, that's definitely worth buying. Griffin's been on a tear and is holding up really well, but a massive gap. I hate buying high, so I can't recommend it because I just don't like buying high. Fresnillo is beginning, it's hit 50% down there at 919. But if I'm right about gold, this should come lower. If I'm right about gold, if I'm too bearish, then this will start to climb above 1010 already. But I think that's going to come lower. At least I hope it is. Sentiment. So this is interesting. This is an Egyptian one. Is it 228? Be careful of this one because it's got relative weakness. What do I mean by that? I mean it's dropped a lot harder than your average miner. So it's out of kilt with the strength of the mining market and may want to come lower. So maybe something wrong with it, basically. Right. Other miners are... here you are. This is one I really like. AUY. No, I've gone off it. Too much red on the chart. And too low a volume. I take it back. I don't like it. If I saw this pick up above 380 with volume, I'd be interested. Otherwise, I'm leaving it. That's it for miners. So we've done banks and miners. The insurance companies are really weak. I won't go through. Okay, let's look at Rio. I'm not going to go through insurance companies at the moment, but I do think they are a sector that I'm going to be buying into later in the, maybe towards spring. Yeah, that's had a high of 63 or nearly 64, just coming into 55, and that's this is what I mean by that sentiment. That sentiment's not doing this. That sentiment's just not potentially not holding. Whereas this Rio is so strong, it's just picked up on really decent support. Okay, right now. Housing stocks, I'll show you. Housing stocks are really getting beaten up, and even Rightmove is in a bad way. This is Persimmon. Actually, Persimmon's not bad. Let's look at some of them are looking pretty shoddy. Let's look at Barclay. That's fallen back to December lows, looking lower. Anyway, so even Rightmove, this is what is beginning to sort of spook me about the UK market. These are major bellwethers that are looking lower. They're not collapsing. They are, that's just come back into support. But at the moment that looks lower. So banks have pulled right back. Insurance companies are in a dire way. Housing is dire, and retail. JD. JD Sports. Yeah, look at JD Sports. That's horrible. Even Next is looking lower. Now, if I don't like this stock, so if you want to short something, I think this is a good candidate. M&S. Why don't I like it? Because I just think it's just I just think management have just not got to grips with its demise, and it's a good brand, but it's in real trouble. That's a significant. It's coming down on volume. So 145 with a stop above 150. I think this could. If the market gets in trouble, I think it could potentially come all the way down to a pound. Okay, or at least the bottom of the channel would see it down at 122. Let's look at next. So the market is, key parts of the market are struggling. Next, that looks lower. That looks as if that's coming down to 73.50 to me. Again, coming down on volume. Right. I'm gonna one area of this to look at for on the long side. ASOS. I like ASOS. I think they appear. I haven't done a lot of research on it. If I was going to buy into retail, this would be a company that I'd buy into. Yeah, they're also they've acquired Debenhams and they're looking at Topshop and the other one, Wallace, and one or two others. Now, markets tend to sort of get nervous when stocks acquire like that, so I still think it's lower. But I think if that comes down to 38 or lower, I think that's potentially a buy. But even Primark is looking lower. If Primark's looking lower, you know things are bad. I think, and they're quite a bellwether now. So 2050 or lower on Primark. But I think M&S is potentially a good short. Ocado's holding up. Right, that's enough of that. Next sector. Right, now buys. Let's talk about things I'm interested in on the buy side. I like this one. This is IG. Now they are buying a company called Tasty Trade for $1 billion. Most of it they're buying in shares, not cash. It's a very profitable, buoyant market at the moment. And that has fallen right, that is very close. If that comes into 7, I'm a buyer of IGG. I'd really like that to dip. It's come down on volume, so I'm not interested at this stage. It's a top of my watch list though. If that starts to go above 750, if that holds above 750, I may have to buy higher. Now let's look at Hammerson for one moment, because Andy's Hammerson is a stock I'm increasingly liking. I just think it's a good way of buying a good brand in a good area. Now, obviously, the housing market at the moment is going to go through a potential dip, but
What kind of stock is it?
Hammerson is building materials, and I did check for UK techs. Thank you for reminding me. Boohoo acquired Debenhams. Okay, right, I got that wrong. No, you're right, aren't you? Oh, it must just be the Wallace and Wallace and Topshop and those kind of brands. Can't remember. Anyway, the one that one I think is a good. It's a nice cheapie. It's obviously got a lot of got some congestion above, but if that dips back to 21, we were at 29 not so long ago. I think this is a stock that you can tuck away. If you're going to buy it, I would sit and hold it for weeks and months, not necessarily days and weeks. Something to tuck away and look at. Now, another one I came across in the same market. Real estate investment trust, right? Okay, right, fine. They used to be in building materials, I'm sure. At least they had a building materials arm to it. Where is it? Here we go. KGP. This is an Irish building materials. So bear in mind what I've just said about housing. Steer clear of this for now, but just keep an eye on it. Could potentially come and find. I wouldn't at all be surprised to see that coming down to 47, 48. But they're Irish based, but they do have bases around key areas. So I'm not buying this now. I repeat, I'm not buying this now, but I am looking at it for the future, the coming weeks and months. I haven't done any serious research on it, so I need to do some more. That is Kingspan Group. Right, another. Now, this is one we talked about before, we've not looked at for a while. Informer. I've been waiting for pullbacks on Informer. So, same story. If we come into 450, now, I'm not entirely certain what they do, but they must be a tech, surely. Let me just answering the question earlier on techs. Rolls-Royce, yeah, okay. I have been monitoring Rolls-Royce. Publishing and exhibitions, okay. Well, we've seen Pearson go mad this week. So maybe Informer could do the same. You know what? I didn't really get anywhere with UK tech stuff. There's just certainly hardly any techs in the FTSE 100. There's just not a lot of UK techs around. So I'm struggling with that one. Right, what's on my list? A couple of other ideas. RB, Reckitt Benckiser. Again, lower, short-term lower, long-term higher. So there's no buy signal here at the moment. I just need to wait for a deeper pullback. We are coming into a zone here. So we may be about to find a base here on Benkai RB. There's a lot of resistance down there. It's certainly a very important area for RB. So again, we've come down on volume, so we may find this coming lower, but I think it's one to tuck away longer term when the time comes, and that time has not come yet. Anybody else got any thoughts on RB? National Grid. Look at a very similar pattern to RB. We're dipping into support. I mean, that has been, we've got nowhere near close to their February highs. So again, I think this is a good stodgy stock that might be worth tucking away. RB, yeah, you could well be right. It's, if it does dip any lower, it could be marginal. So I think National Grid and RB are good candidates. Right, so I'm missing out. Let me just backtrack on some of your questions because I've not been answering your questions. Good question, James, about instruments to buy that on. If you're buying any reasonable amount of it, the IG interest on CFDs and spread betting could be quite significant. So I'm buying it in a pension fund. Another way is obviously through an ISA. I would personally buy. I would only buy that. I'm going to sit in it, so I need to avoid the costs of CFDs and spread betting. So I would buy. I would buy the underlying asset. Okay. Rolls Royce. Didn't look at Rolls Royce, did we? I was looking at BA Systems as well today. I think we could be getting ready to go. Again, we are coming down the volume of this, but it is at a really, there's a lot of interesting stocks out there at long last. This is a much easier time to scan for stocks than it has been. So if Rolls starts to close above 95 and obviously the 100, I think we could recover to 133. So I'm liking these RB, RR, IGG, INF. These are all good stocks, plus some of those miners. Right, have I missed any other questions that you've put in? Looking at IMB. BP we did look at earlier. I'll just go through it again quickly. Yeah, so might trickle down lower. Well, who knows? Got earnings coming out Tuesday. So it's not connected with that trend line yet. So you may, if you're interested, you may be able to pick that up lower. IMB. What's IMB, Andy? Can't find it. Imperial Brands, right. I've got it as IMT. That could be just IG. Ooh, right, okay. That's a wild chart with some heavy selling. Obviously, I've looked at this before, haven't I? Must make a note of this. So, pre-COVID, we saw 17, saw nearly 18. Post-COVID, we saw 1160. I would have thought we'd see 1400. It's come down on big volume. What do? Going its div on the 18th. Right. So hence the selling then. So the main structural support is 1350, 1360, and we are currently 1471. Great distribution pattern, as we've seen in a few of these stocks. Yeah, it looks lower. Oh, it's fallen the Imperial Tobacco, right. They just dropped the tobacco part of the name. Right. I presume that they've come away from reliance on tobacco and they are doing, what do you call it, vaping. I was going to say snorting smoke, but vaping. I presume they're into vaping. Yeah, Unilever, yeah. Is that what you mean by ULVR? No. Yes. Coming into support. So I've got a zone there of 40.85. So it may be about to find a base. If we come into 41, 40, if we just dip a little low into that 50%, it may turn around, but at the moment, short. It's come down on volume. Right, PGZ, what's PGZ? I'm going to go in a second, so if you've got any more requests, punch them out now. Procter & Gamble, right. Is that right? Is that what you're interested in? Have I got the right stock here, Procter & Gamble?
Yes, Mike.
Okay. I wouldn't sell it because it's already gone. It's gone too far for me to sell. If I was going to sell it, I would have started to look. I would try to get. If I'm going to sell, I've got to sell as high as I possibly can. We're coming to 125 support here, so it's too far gone for me. Yeah, but the ones if I'm going to sell, I didn't look at the ones that, yeah, let me go to my sell list. If I'm going to short, I like Crest Nicholson, because the property market is, most of the property market is already tumbling, or at least pulling right back. This one has got signs of giving way. The volume's very slack up here, and we've got a pin bar and a lower close here. So if I'm going to short this, I would try and sell into 330, potentially bid, offer out at 340 potentially. Now, but I mean, if any chance of getting in, you've got to go around about the 330, 333 mark with a stop above 340. Keep your stop out of trouble. There is a gap up there, but I would, if that closes underneath 300, then we've got a gap down here at 220. I think this could come tumbling down. So this is a great short candidate for me. That's how I like shorting. I wouldn't risk too much capital initially, but I would certainly add if we start closing under £3 there. The other one is, can't remember what this ticker is. Hayes. Right, okay. I think this Hayes candidate is a good short candidate. Why? Because it's topped out it's in a vulnerable sector, i.e. jobs, recruitment. It's already come off of a main resistance area up there at 152. Again, if I'm going to short it, I would offer out at around about the 145 mark with a stop above 155. So I would wait to see if this picked up. I would offer out, I'd like to sell into that, sell any rally or any push with an aim to see if I can get this to wind down. Because at the moment we're on key support. Right. Nope, that's it. Right. Final call. Otherwise, I'm just going to close up now because I've been talking for an hour and a half. Have I missed anything else? Mazine, you were talking about Cine. Yeah. That's actually had a good time recently. Held up very well. I'm amazed this is holding up actually, given what the situation we're in at the moment. With cinemas being closed.
Exactly. I just want to know who's buying this stock.
Yeah, good question. I think I tell you what, I think it's a good idea to short it. Logic says it's lower. If you find yourself able to get short around about the 80-82 mark, you gotta get your stop above 90. So again, same story. If you're going to short something, try and offer out into resistance area, and then see if you can get it to drag down. Otherwise, if you get short too low, you've got to have a bigger stop to have any hope of staying in it. So my strategy with shorts like this is just to try and offer out at a higher price to get the tightest possible stop and reduce my risk. But the volume is getting pathetic here, so it's hard to see that sitting up. But surprisingly, in the midst of a weak couple of days, this held up. So yeah, somebody out there's buying it and holding it. But yeah.
With AMC in the US, the AMC stock is doing same thing in movie and cinema. They started shorting it, it's gone up so much.
Right. Okay. Brilliant. Right, I'm off. Thank you very much for your company, guys. Yeah, thanks. And midweek is 6 p.m. Midweek review is 6 p.m. Wednesday if you're interested. Links are on my website. Yeah, see you then. Day trading program is next Saturday if anybody's interested. I'll talk about day trading stocks on my program. Actually, I don't normally do that, but as there's so much interest on that, I will go through. So if you're interested in that, come to the website and take a look at the Learning Center and drop down to day trading. Right, thanks again. Thanks everybody, and bye for now.